fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it up when the sun is ruined. That's the same way you showed me. You showed me love. Glory from above. Regardless, dear, it's all downhill from here. Remember life, remember how it was. Tom G, Michael Jackson, all in shit. Say what up to Becky, the shoe. Say what up to Penny. Say what up to life and my child. Running on my bikes, running up. Not for me, 18, still in granny 6. Give me something sweet, bitch, I might like immortality. This is life, life, immortality. That's the way every day goes. Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes. Halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive. Won't let you down when it's all ruined. Just the same way you showed me. Showed me. You showed me love. Glory from above. Regardless, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it up when the sun is ruined. That's the same way you showed me. Showed. You showed me love. Glory from above. Regardless, dear, it's all downhill from here. Remember life, the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above, regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk craze. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above, regard, dear. It's all downhill from here. Remember life, remember how it was. I'm G, Michael Jackson, all in shit. Say what up to Maggie, the shoe. Say what up to Penny. Say what up to life and mortality. Running up my bikes, running up. I'm for me, 18, still in granny six. Take it easy. Give me some sweet, which I might like immortality. This is life, life, immortality. That's the way every day goes. Every time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move, it's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above, regard, dear. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nose dive in the floodlines, tall tower, milk craze. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it out when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above, regard.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 30th, 2023. And it is all downhill from here. By that, I don't mean to say we're going to dump or we're going down in price. No. It's going to be a lot more easygoing in terms of this technical uptrend. And I'm going to show you why, all right? I'm going to show you why you can expect even more upside from Bitcoin and the rest of the cryptocurrency markets. And even though we're still going to experience some corrections, the corrections should be minimal, especially when you compare the corrections to the impulsive moves to the upside. All right, so that's what we're going to talk about today. Obviously going to look at the DXY, our main indicator on this chart. We're going to also talk about the total cryptocurrency market cap, and we're going to look at some other altcoins if the time permits. Guys, it's nice and sunny in the DC metro area. Hope you're having a great day today. Hello, Akanksha. Akanksha says BTC rejected the 200 EMA. So again, I would say, is it a rejection or is it a consolidation? I don't know. I don't have the 200 EMA up, and I'm not. It's not a what's the word? It's an actual question. I'm not. I'm not trying to be smart or anything like that. But let's talk about the price action. Let's talk about the price action. So on the small time frame, let's start on the 4 hourly. Okay, looking at. Let me take this off for a second. Because it's hard to see what I'm gonna try and show you. All right. So what do you see? Right here looks like some consolidation. Looks kind of like a consolidation in a rising channel. Yes? No? That's kind of what it looks like to me. Okay? But I've looked at this quite a bit, and we've allowed the price to do what it does, and I think we have a little more clarity here. And so now let's put that channel back. Where is it? Here it is. And from what I see, and I know a lot of people are freaked out about it, but this is simply a retest of, what is it, 8 days? Let's see. I'm sorry, I should have checked this beforehand. Yeah, let's say 7 to 8 days. So you spent 7 to 8 days in this consolidation space, okay? Going up and down in this channel. You broke the channel to the upside, and you come back to retest the top of what looks to be like a neckline here, okay? Call me crazy, but that does look like some sort of neckline, no? I think this is a little more visible and clear on the total cryptocurrency market cap. But essentially, if I'm trading this and I'm like, let's say I just got into my trades, because a lot of people did, okay? I'm going to look at it this way, right? Just simple support and resistance. We were at this level, we went higher, we came down to retest it, should go higher. It's nothing, it's not much more to, there's not much more to that, in my opinion. And what kind of corroborates that read is if you go on the total cryptocurrency market cap. Again, the total cryptocurrency market cap represents all of the different cryptocurrency assets, all, put together. And so you see trillions of dollars on the y-axis, right? And here you can see it a little more clearly. You can see that inverse head and shoulders, which we know is a bullish pattern. And it's only confirmed once we break the pattern to the upside to confirm the pattern. And that was confirmed. And also, if we retest the neckline, I think, if you look at Investopedia, they talk about confirming this pattern with a break to the upside. I would add the retest. The retest is just as important as the break, okay? So you not only want to break, but you also want to retest. And I think this is what you're getting here. You're getting a simple SR flip of these 8 days, 7 to 8 days resistance. So that to me is what is happening here, okay? In terms of Elliott wave theory, let's go back to the Bitcoin chart. Here's what I think is going on, okay? And once again, sometimes reading complex corrections is complicated. Not because it's inherently complicated, it's just, there's just so many different permutations and combinations that the price can take. It's hard to predict. But once you see it, it's a little easier to make it out. Here's 3 waves, okay? So that's my W. That's my initial break of structure of whatever, if it's WXY, a double 3, if it's a WXY, XZ, a triple 3, always starts with a W, your initial break of structure. I see this as a contiguous 3-wave move. I've said that before. That's a Y wave to me, okay? And I think it all ends with this Z wave impulse to the downside. I think this is a double 3. I think, and I've looked at this and I've kind of corroborated it with not only the total cryptocurrency market cap, but other assets. On this date, it was a Thursday, yeah, at around 8 p.m. Most assets have had completed some sort of technical pattern, corrective pattern. Okay, so let's say that is true. Okay, let's put that in officially. Okay, let's put in a double 3. A WXY, okay? So this is what I'm reading. Again, you don't have to get these pinpoint accurate, reads of complex corrections even to make sense of it. I think what a lot of people miss is that successful analysis is typically simple. The better I get at doing trading, the better I get at doing chart analysis, the simpler I get. I can sort of speculate into, is that a double 3 or a triple 3 or whatever. But at the end of the day, when I'm putting money on the line, I'm going to look at the simplest, most straightforward, high probability read. And the simplest, straightforward, high probability read is what I said. You break 8 days of resistance and you retest it as support. And then you take off. My RSI momentum indicators are telling me as much, not only on the hourly, but on the 4-hourly, that this has reset the overbought momentum back to oversold territory. Like, everything's telling me that. Also, when I look throughout the altcoin market, I can see things already starting to break out from these levels. So many things are telling me, that read is accurate. Okay, so then I can have a lot more confidence to say, okay, looks like this is my double 3. And, a lot of people don't know this. A lot of people ignore this. But after a pattern, you don't just up and continue. You have to put in what we call consolidation reversal patterns, what the Wyckoff people call accumulation channels. And again, those channels are not always orthogonal. They're not always straight. Sometimes they're like, sometimes they're like this. Like in the case of Bitcoin, when we're extremely bullish, your consolidation reversal channel is going to be slanted up and to the right, okay? And that's what we call in Elliott wave. And a lot of Elliottians, people who claim to practice Elliott wave, don't know this and totally ignore it. And I guess this is why a lot of people make Elliott wave so complicated, because imagine trying to make all of this one contiguous complex correction. Imagine or trying to make this a part of some, like, you see some crazy things on the internet. Some people try to make this part of some impulse, right? Or like, maybe it's for them distributive channels, so they think it's going to drop. Do you see what I mean? It just doesn't make sense when you don't have very crucial understanding of different modes of price action. So this is a corrective mode. This is AB base mode, or accumulation distribution mode, whatever you want to call it. It's basically the intermediate mode between impulse and correction, okay? So here, I would count this AB base as such, okay? This is clearly an initial break of structure. You got 5 waves up here. You got 3 waves down there. That's my first A wave and my first B wave. Call that big A and big B, okay? I would then say that this is my second A wave and my second B wave. You actually, if you count AB bases enough, you see this a lot in bullish patterns. I think we even got this in Bitcoin earlier towards the 16, 17K region. But you saw the initial break of structure was a 5-wave structure, and then the counter to that was a 3-wave structure, obviously. So that's a zigzag, and then so you get a zigzag and then a flat. I see that so many times. So anyway, small b is this flat, and then you have your pivot over here, and then that's your 2 degrees of AB basing in your pivot. That's it. This corroborates what you're seeing in your momentum indicator, not just on the hourly, but also on the 4-hourly, as I showed you a few moments ago. That's all I'm seeing. Okay, in terms of, Kamsha asked, what's your downside target? Like, I'm gonna be honest. Like, it's really difficult for me to lie and say that I believe that we're not in impulse, that we are. I would be lying to you. I'd be lying to you. I understand the whole concept of you have to be open to this and that, but also I think a good analyst, a good trader is confident in their reads. Okay, and when they're not, they admit it to themselves. I don't buy into this. It could go up or down. If you think that, then you're shit. Or you just don't have a good read on the market, which sometimes happens. But if you're always 50-50, you just don't know how to read. If you're always... Okay, I'll ask you this. If it's bright and sunny outside, obviously it could rain at any moment. But could you say with a high degree of probability that if you go and get the mail, that you won't need an umbrella? If so, then that's kind of what, like, you see the signs. You can look up at the sky. You can smell sometimes the ammonia in the air when it's about to rain. Like, when you're looking at these charts day in and day out, you can kind of tell what's going on, okay? It's not an arrogance thing. It's just like we put in the work. We put in the work, okay? So this is kind of why I'm saying it's all downhill from here in terms of ease, okay? And let me show you why that is. Let's go on the daily time frame, okay? Still on Bitcoin. Remember what I said last show, 2 shows ago? If you really, really think about it, all you're dealing with is resistances and really important resistances that occurred in the bear market. And after that, there's really no such resistances. Right here, that was the resistance that, represented the top of the bear market accumulation range. You dealt with that. You retested it. This was the resistance of the 434-day downtrend. You dealt with that. You retested it. What else do you have to deal with? I'm going to prove this to you. Watch this. All right, watch this. A lot of people are talking about 25K, 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 25K. Okay? That's an important thing. You got to make a higher high, whatever. People just make shit up. Let's see what happens at 25K. Okay. On the monthly time frame, first and foremost, if you just go on the monthly time frame and you look at the chart, what do you see? You see a massive candle, the likes of which you haven't seen probably since the last bull market, or at least this B wave. Okay? There's a lot of trepidation, a lot of PTSD in the market. People are like, oh, it's going to come down. The other shoe's going to drop. Obviously, you fear what you don't understand. If I don't understand anything about charts, I just look at the price action. Nothing means really anything to me inherently, but I see what happened in 2017. We go down, we go up, oh, bull market, and then we come back down for March of 2020. For a lot of people, that's kind of a prelude to what price does. It's tricky. It goes up, it goes down, it goes up, and then back down, or whatever. Down, up, and then back down, right? It fakes you out. It's never going to give you what you think you're going to get, right? That's for us who study markets and actually read about this stuff and study these things. And you don't have to make up the wheel. A lot of people, for some reason, want to reinvent the wheel. Like Gann analysis doesn't exist, Elliott wave analysis doesn't exist, Wyckoff doesn't exist. Just because those things exist and you hear about them doesn't mean you've grasped them or you have a good handle on them, right? You have to study them. You have to take some time, right? And a lot of people say it's bullshit because they haven't taken the time to really understand these things. But all that is a flat correction, isn't it? Right? When we talk about Elliott wave theory, that's an ABC flat correction, all right? Same thing here. What happened here? We went down, we went up. People still to this day call this a bull market. Big accounts, huge accounts on Twitter, huge accounts in, technical analysis. They all call that a bull market when we know, technically speaking, yeah, you're making higher highs and higher lows, but it's very brief and it's within the context of an ABC correction. Once again, you have ABC corrections. That's just how shit corrects in Elliott wave. 5 waves up, 3 waves down, or some version of 3 waves down. You got 3 waves down here, and again, people are going to say, well, every single time Bitcoin goes up on a high time frame, it comes down again, and then goes back up. I've heard that. I've heard huge accounts, people who take people's money for their skills in technical analysis. People are subscribed not just to their YouTube, but to their course in teaching how to read markets. They basically are saying, why is it going to go down? Because last time I did this a few years back, that's what happened. So that's what's going to happen. Again, short memories, disrespect, complete disrespect of the... It's really arrogant to say that I looked at 5 years worth of price action and I understand all the price action. Really, you did shit. You didn't really... Bitcoin's 14 years old. If you really want to study markets, you go into traditional markets to study chart patterns. And you study chart patterns, period. But you don't act like 14 years of Bitcoin's price history dictates all of, possible price history. It's so... The hubris. Anyway, people have PTSD because of these flat corrections, and they don't remember that this was a bona fide. They maybe can't distinguish this bull market from this higher high and this bull market, right? So again, do your research, do your own homework, study for yourselves. It's not that difficult. I'll tell you that much. It's not that difficult. But it's really difficult when you just blindly listen to what people say. It's so clear that this is a clear uptrend. So clear. It's so crystal clear. Okay? You put in your flat correction there. The boogeyman is done. There's your flat correction there. Here's your flat correction. Now you need another impulse. It's it. That's all. It's all downhill from here, my friends. Just wait. Watch. And I know people are like, well, I've been listening to you for years, and you're not always correct. On a higher time frame, I've been quite accurate, okay, on a higher time frame. I'm not talking about, my working through what the hell this was and how deep this flat correction was going to go. I initially thought it was going to stop around here somewhere. Okay, that's fine. But all in all, right, we learn, we make mistakes, we repeat, we learn again, we make more mistakes, refine our reads. I was in the course or process of this impulse. I was still learning, to be honest. I was still learning a lot of things. I'm still learning today. I think it's a perpetual process. But that being said, the basics are there. The basics of understanding that tell you what a flat correction is when you get impulse. And we're clearly in the impulsive stage. So to answer a conscious question, I have very little doubt that we can go down. Does that mean I have no stop losses? No. I always know. There's always a chance that I can be wrong. Even if my probability of being right is high, I've had a lot of my positions stopped out into profit. okay? But I think with a high degree of probability, you're going up from here, and there's very little resistance here. Let me turn on. Okay, I've already got the VRVP. Sorry, the horizontal volume indicator. Right, it used to be called the VPVR. I don't know why they've rebranded it to VRVP. Visible range volume profile. That's what it stands for. And you can see it to the right here in blue and purple. And it essentially shows you all the market activity at a given price point. Now, this is helpful, and some traders swear by it because it helps you form range awareness. And by that I mean, if there's a lot of activity here that you know it's going to be high probability for some sideways consolidation, because there's just so many orders, it's hard for price to move quickly. In order for price to move quickly, you need volume gaps like this right here. Do you see that? And then you see the volume gap here. This is why a lot of traders were calling for a big dump between 17 or 16 or wherever we bottomed out and 12K, because there's essentially nothing holding price between those levels. You don't need the VRVP to see these things. The VRVP is just another way. It's just a tool to make sense of what price action shows you. And I would recommend, you can use any indicator you want, but just learn how to read price action. It's not that difficult. As you can see, this is a top, and between this bottom and that top, you have that volume gap, and that's what's represented in the VRVP. Okay, so just a quick, summary of what you can use the VRVP for and how you can use it. Now, the other thing that it tells us is, and I've said this before, if you look above where we're currently at, there is nothing. Okay, there's some activity there. Obviously, this represents the bear market accumulation. We spent 230 days there. This is a monthly chart, by the way. But once we get above where we're at, and we are currently at the top of this range, clearly, there's essentially nothing here. You can see the difference. Look at the difference between the orders here and there. There's a significant substantive difference between price action here and here. There's very little here. So once we get into this range, people are calling for all these imaginary, and I'll say yes, they're imaginary, they're made up levels and targets. You'd be the biggest fool in the world to take profit in this region if you're long, because there is no reason, there's nothing, there's no resistance. Just leave it. It'll go. Okay, the biggest resistance, and I said this yesterday, or not yesterday, but Friday, or was it Saturday? I don't remember. I said this recently. The biggest resistance is the top of this parabola, right there. And that would be in the 6 figures. And it sounds crazy, but look at the freaking chart. This is what the chart's telling you. The chart's telling you that there's shit resistance. There's nothing between where we're at, all-time highs, and actually the next time Bitcoin should run into significant resistance is this 14-year resistance. And for those of you who may not be familiar with this chart or are new subscribers, if you zoom out, let me turn off the VRVP. I'm on the log scale, by the way. That's why it distorts the VRVP. The only thing that would be significant resistance is this, which has served as significant resistance for all 14 years. Every single time Bitcoin's topped, it's hit this parabola. I do expect it to do that once more, once we get into the 6 figures, and then it'll bounce down, not to reject, but to consolidate in a wave 2 correction. Okay, I want to show you one more thing. I want to show you one more thing on the topic of are not really experiencing much resistance above where we're at right now. And actually, to do that, let's go back on our other chart. It's cleaner, and I really want to demonstrate to you with another indicator, so some EMAs, exponential moving averages. Akansha was discussing the 200 moving average, And people like to use the 200 moving average. It's completely arbitrary. Always do your own homework. Don't just listen to what people say. There's a reason, I always like to say this. The reason I use exponential moving averages, one, it's because they're, I think, a little more refined than the simple moving averages, mathematically speaking. Because if you look at how they're devised, they're a little faster, they're a little more responsive, they take in a little more data. Secondly, I use the Fibonacci periods. So I use 55, the blues 55, the green's 144, the yellow's 21, and the pink is 89. There's a significance behind those numbers, right? They're not just any old numbers. The 20 is any old number. If you're going to use 20, might as well use 21 because it's mathematically proven to be more significant. But again, it's just like, monkey see, monkey do in the crypto space. Somebody used the 20, showed a relationship, or the 200 rather, showed a relationship on a high time frame where the short market history of Bitcoin, which is, 14 years, respected this EMA. And so this is the king EMA. It's just an arbitrary period. Okay? Always do your research. Don't just believe, the 200 moving averages. It's just completely arbitrary. It's nothing bad. It's just arbitrary. But I like to use exponential moving averages, and specifically those Fibonacci exponential moving averages. Okay, there's a reason I said that. It's because if you turn those exponential moving averages on, not just on the daily, but let's go back to the monthly, our high time frame. What do you see? Okay, so exponential moving averages, remember what these lines are also. They're basically using all of the price action that you have available on the chart, and they're getting averages. So the yellow line right there, every 21 days, it calculates the average price based off of, a formula, and it gives you the price of what it should be. It's like, based off of the historical price, here's what it should be. And so here you have the actual price higher than the average of what it has been on the every 21 days prior. Does that make sense? I think it's important to understand your indicators, or else you're not using the tool. The tool is using you, and it's easy to be misled. So you can see that here we're moving higher than the average, or the indicator suggests we should. And we came back and met the indicator over here and broke below. Here we're moving lower than the indicator suggests we should. In this move right here, this is a monthly time frame. This huge green candle, huge green monthly candle, it's been a very green January. It's probably going to be an even greener February. Okay? We're meeting the average of what Bitcoin should be according to this 21 exponential moving average. I'm not going to go into the mathematical significance of the 21 exponential moving average. Again, if you're really serious about technical analysis, don't just listen to people who've been doing it for 5 years or 4 years. It doesn't matter how long they've been doing it. It matters how deep they've been doing it. That's true. Because there's some traders who've been trading for decades who just make the same mistakes. They don't get any better. Okay? It's not about length of time. What I meant by how long is they're pulling off of data, they're pulling off knowledge from a store of knowledge that's very recent, and they ignore everything that came before. There's a long history in many different markets, traditional markets, cryptocurrency markets, of the 21 being a very accurate indicator. Also, mathematically speaking, I welcome you, study some Fibonacci, study some mathematics as to why these numbers, the 25, the 55, the 89, the 144, why they're so important and why they're significant and why they're used, not just in technical analysis with financial modeling, but in NASA, in, making cars aerodynamic and all that stuff. Like, they're not using the 200 simple moving average, to calculate the trajectory of a missile. Okay? So, again, do your own fucking research. Like, I hope and that most people in this space get a little wiser to what they consume. Like, curate your consumption. There's a lot out there. You don't have to listen to it all. And even if you do listen to it all, you don't have to buy it all, right? Trust but verify. Sometimes even listening to bad things, it's not bad if you can discern what it is. Okay, anyway, this 21 exponential moving average, we're below it. We're going above it. That's what the monthly EMA is saying. If we do get above it, what do you see in terms of resistance above this level? And this level, mind you, is around 28. Okay, people are talking about 25. Completely arbitrary. Because again, even the 21 exponential moving average right now, as we speak, is around 28K. And it doesn't mean that it's going to be resistance. It could be a little friction. But let's say we get into this zone. There is, mathematically speaking, nothing beyond it. There's nothing beyond it. Okay, so that's the monthly time frame. Let's see, on the daily time frame, same thing. Even your EMAs are telling you, once we actually start moving and price goes up from here, there's nothing. So this is a daily time frame, mind you. I've got all my EMAs. So my yellow one is the 21 again. The 144 is the green. The blue one is the 55. No, yeah. The blue one is the 55, and the pink one is the 89. You're above every single last EMA. So to answer your question, let's say I was an EMA trader. Conscious says, how low can we go? Look at the EMAs. Let's say I didn't know how to read price action. I was heavily dependent, maybe over-reliant on EMAs. I'm not. I wouldn't, and a lot of trading tools, indicators, suites are based off EMA trading strategies. You're above all your important EMAs. You got a golden cross, I believe this is called, a cross of basically my 21 is my fast moving, basically is my smallest period, and my 144 is my slow moving or my longest period. The fast cross the slow. That is, I believe, that constitutes a golden cross. Correct me if I'm wrong, but that's when you close your eyes, buy, and walk away. So that's why I'm saying it's all downhill from here. But again, the PTSD of previous market cycles, people not really understanding why price action does what it does on a high time frame causes them to see a very clear uptrend and fade it and say, well, the other shoe's got to drop. This is too good to be true. Okay, so that's a high time frame analysis. And if you really go back on the monthly throughout the market, okay, there are some assets that, Tron, for instance, they've already met their 21 exponential moving average on the monthly. Meaning, once this breaks, there's literally nothing. You're going into price discovery. There's no reason you can't print 200% candles daily. And you might see something like that very soon. Another example of that is Litecoin. Don't be surprised if Tron, Litecoin, things like this start moving hundreds of percent per day. And people are going to be like, well, I don't know. In my estimation, that's a bit much. It's got to cool down at some point. Yeah, everything cools down, but not in the way they think it does. Okay, we're going to get a little more into that. But look, for instance, at Litecoin. Look at these two EMAs, the 21 and the 55, right? The blue is my 55. You're literally just breaking that to the upside. There is absolutely nothing else ahead of you. There is no resistance. I understand that the all-time high is here, but all-time high, people love to say in crypto, is a psychological resistance. It isn't. Technically speaking, it's not. When you're talking about resistances, you should be able to draw trend lines and trend lines made up of data points, places where price has historically shown to make levels of support. And so if you're resistant, if you're below it, right? You don't have any of that here. So there is no resistance there. It's just something people say. So Kangsha says, some account on Twitter posted a chart that BTC was making a dragon pattern. I don't even know what a dragon pattern is. There's a legit pattern like that. I was surprised. Can you look into it? Yeah, I don't know what a dragon pattern is, to be honest. So I wouldn't be able to comment on that. But, I mean, there's going to be a lot of fear-mongering, right? It's just, I think it's par for the course. There's got to be people who lose and then people who win, I guess, in a market, right? There's going to be people who misread it. So it shouldn't surprise us. But I think, what's important is, not what I say, not what anybody else says, but what the market is telling you. I think that's what people should go off of, right? And that's why at least that's why I do technical analysis, because I'm not trusting anybody with, all of that money. I'm just going to look at some data that seems straightforward, and it's primary data. It's not somebody interpreting it. It's just, this is the price. This is the time the price was given. And that's all a chart is, right? Let me take the EMAs down, because I don't need them anymore. Boom, 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 boom. I used to use the EMAs a lot more. There's nothing wrong with using EMAs. It's just I don't need them as much as I did before. Before I felt almost naked, or I felt insecure without my EMAs, especially on my reads. Like I'd be like, okay, well, I think that, but what are my EMAs saying? And after a while, it's just I took them off. It's kind of like training wheels. I don't need them anymore. But sometimes they're helpful to just corroborate certain things, just like any indicator. So on the hourly time frame, yeah, I already showed you guys what I thought in terms of the small time frame read, and look at this right here. This is going to be great. This might happen while we're on stream. It might not, but here, let us look throughout. Actually, there were a few things I wanted to show you first. Okay, I already showed you total cryptocurrency market cap. Like, this is a big one, right? You go up, you come back down, you're retesting previous resistance as support. I know it's not like picture perfect clean, right? Because you did this, you come up, you come back down, and you're kind of in the middle of this, right? And I know we want to draw our resistances and supports as a line, but in actuality, they're more like ranges, right? They're more like ranges. And this is why you have, sort of price wicking. Sometimes price hits it directly, to the penny. But I think, technically speaking, the more accurate description is a range. Come up, you retest it, and you do have to, if this is correct, you do have to consolidate here, and you do have to come back up, okay? But I think that's likely to happen, more likely than not. All right, let us look at the DXY. So the DXY right now is still in that same pattern we've been looking at, okay? It's still in this consolidation right here. It's actually gone up and down and up and down and up and down, always slanting down, okay? Now, what we're looking for is an ultimate rejection, and we were talking about how this was a double top the other day, how this was a really encouraging sign for a consolidation reversal or distribution pattern, okay? And that may still be playing out here, okay? Anytime you finish a consolidation, you're going to finish with an impulse, okay? And so because the trend is down, the impulse you're going to finish this consolidation with is going to be up, okay? Because it's a counter move, all right? It's an intra-wave correction. So the correction is going to be up while the trend is down, the correction's up, all right? We get that. After you finish that impulse, you're going to have to print that AB base, all right? A lot of people ignore this. This is kind of like, I think if more people integrated that, there would be so many more like elite level, like God level traders and God level analysts. I guarantee, because I don't know how you can look at a chart and make sense of it without that. It's like a whole mode just ignored, you know? It's just you make sloppy mistakes. You start throwing everything together. This may very well be a correction, but at some point in time, this correction ends, and then you got to consolidate to prepare to get back into your trend. So that's how I'm reading the DXY. We're right now doing some sort of AB basing, some distribution to get back into that downtrend, okay? And if I look at my indicators, I got my stochastic RSI momentum indicator, that's the story it's telling me as well, okay? Let's say, just for argument's sake, that this is, let's see. Let's say that this was my final impulse of my correction, and this is my initial break of structures. It's hard to say. This is my counter, so that's my first degree of AB basing. Maybe this is my second degree. I don't fucking know. It's tough to read. It's really tough to read. I'm completely speculating, but what I like about this is the fact that my hourly stochastic RSI is completely overbought. Okay, my 4-hourly stochastic RSI is completely overbought. Okay, my daily is getting to overbought territory. My 15-minute is completely overbought. So on a high time frame and a small time frame, I'm basically exhausted. This move is exhausted, okay? Likely to produce a downside move. That downside move, we know, is likely to translate into a huge move up for stocks, cryptos, all risk-on assets. This is how I like to look at, a lot of people say, well, Dean, good analysis and all, but, you never talk about the CPI numbers. You never talk about the FOMC, all that stuff. Like, I just look at the dollar, because the dollar will reflect all of that. All of those decisions, all of those rate hikes, all of that should be reflected in the dollar. And here we can look at it as data and actually track it and read it, in terms, technically read it. So I think this is just more convenient, a little more, I don't know. I just like it a lot more than, speculating on some random number and what people think about the number, because that's what you're doing. Okay, here we go. Let's see. Okay, look here. This changes certain things. Because we broke this, and this to me looks like a clear pattern, a 5-wave move. The question is that AB base now more something like this? It's likely. Let's look at it on the total. Yeah, it's more likely than not that your AB base is more something like this, okay? But at the end of the day, when you're putting in AB bases, you're looking at a move, a counter move, another move, a counter move, and a pivot. And the move, counter move, and the secondary move and counter move and the pivot can take on a lot of forms. But what it can't do is break the phi ratio of the initial moves. So technically, there's always a way to measure to see if it's valid or not. Although you may not know exactly how it's supposed to look, we know more or less where it's going. And that's the strength. The other thing I'll say is this. A lot of people may call this a massive move, right? Because I said, I think in the Saturday video, I'm not expecting any major retracements, okay? For a lot of people, this is a major retracement. If you got into a long here, yeah, maybe it's a major retracement. I don't know, depending on how you set up your position. But honestly, if you've been involved in this move for the past, I don't know, month? For the past month, we've just been going up, essentially. Obviously, we've been consolidating. We consolidated here for 6 days. We consolidated here for 8 days. You're still in a very strong uptrend. So, yes, we haven't had any significant retracements to the downside. And for me, this doesn't represent any significant retracement. A significant retracement to me would be breaking structure, would be, kind of like when you put in an A wave after putting your 5 waves up and you go to that wave 4. You're pretty much stating that, okay, I'm going to make a proper retracement. Okay? So yeah, for me, I'm still looking at this from here on out. Do I like this? 1 second. It's not a question of where it's going. It's a question of how I'm reading this particular range right now, This is such a clean 5-wave move. Could it be the final move? Could this be a double zigzag? Or sorry, not a double zigzag, a triple 3 instead of a double 3. It's possible. Okay, I'm not against saying that. Like before, when it was up here, I was more in the camp of a double 3. Maybe it's a triple 3. That's possible. But what I want to say is, and the most important thing is, this doesn't change the overall analysis, because the overall analysis is that this is an intra-wave correction. The overall analysis is this is an intra-wave correction. This is the trend, and the trend's continuing. And there's very little resistance above here. So everything I'm doing is pretty much preparing for longs. Now, if I'm, just getting into my positions here on high leverage and I'm not protecting against downside, of course, I'm going to get wrecked and I'm going to get stopped out. But that's not the case. And you all know that, we've been in positions since the beginning of the year. So I still feel like it's kind of a no-brainer. Here, let's see. On the total crypto market cap, it looks a little different than Bitcoin. I would say that this looks more like your 2 degrees of AB basing. Okay. But for Bitcoin specifically, I would read it like a triple 3. And I guess a lot of people don't get this nuance. Like, oh, you didn't get it right. You said it was a double 3 in the beginning of the live and ends up being a triple 3, or you're changing it so you're full of it. These corrective or complex corrections are tough to read as they're forming, right? But they're still complex. Like the fact that price is counter correcting is it. That's all you need to know. Keep it simple. It's counter correcting. Okay. Now you trade the trend, right? And I know a lot of people are going short here. For how much? For what gain? It's very risky, and that's fine, to each his own, but I'd rather go long on the trend every chance I get, because from what I'm seeing on a high time frame, that's the winning trade. That's the winning trade. So let's look throughout the altcoin market and see what it looks like. We're back below 23. I'm not concerned. I'm actually seeing this all as a contiguous range at this point. I did think that this was a break of the range, and so we would retest this, but clearly we're not finished. We're not finished here with this range. We haven't left this range, because if we did, we wouldn't have come back. Okay, so that's the importance of the retest. So I think all of this is one contiguous move. All right, and I would actually adjust this channel to reflect that, so it looked something like this. Okay, but a lot of people are going to be looking for downside risk because they're way zoomed in on a really small time frame, and they see something like this and they think it's going to continue to go down. But again, context matters. All right, let's look at some other assets. Cardano, for instance. Okay, I look at this. So this is another example of why would you fade this? Look here. 1, 2, 3, 4, 5. I think that's a clear 5-wave uptrend for me. All right, that's an impulse. Elliott wave says impulses take the form of 5 waves, and corrections flavors of 3. Okay, we say flavors of 3 because it doesn't always look like a 3-wave move exactly. We know that, right? But here I see a flavor of 3, ABC flat correction, and that to me seems like it took just about the same time as the 5-wave structure. Do you see what I mean? And for me, it's just, these two are a pair. 5 waves up, 3 waves down. I'm expecting this trend to continue. I would not confuse the counter trend for the trend. You want to trade the trend, not the counter trend. Because the counter trend goes like this, just like, on a high time frame, people freak out because Bitcoin ever so often does this and this, right? The high time frame holders, like the hodlers, the people who've held Bitcoin for years, didn't confuse the counter trend from the general trend. And that's how they've won. Not to say you can't play high time frame counter trends, because you can, but here we're not talking about a high time frame counter trend. We're talking about a small time frame trend. Where's this chart here? So I mean, it's just, this is nothing. This is absolutely nothing. I think this is 1, 2, 3, 4, 5. This is the end of this ABC correction. Again, you can measure it. It comes down between the 0.382 and the 0.618 of these prevailing 5 waves. So this looks very much and feels very much and acts very much like an Elliott wave impulse, wave 1, wave 2 correction, right? We're looking at the timing as well, and our momentum indicator is telling us that this counter trend that you just saw printed reset the momentum all the way down to oversold territory, which is what you want to see. Obviously, after the correction's finished, you should have real estate runway for another move up. Let's keep going. Okay, Algorand, same thing. You retested this important line of resistance as support. You put in what seems to be 5 waves up, and then you put in a version of a 3-wave move, okay? That took approximately, I want to say, let's see. Let's measure. Okay, I'm on the 4-hourly time frame, so the measurement's going to be approximative. 4 days, 16 hours. 6 days, 8 hours. Okay, so what you can be looking at here. Let's see. 1 second. One second. That's 2 days, a little more than 2 days. Elliott wave theory is awesome because you can use time to get a better idea as to what's going on. Okay. It's also possible that this was wave 1, wave 2 right here. And then this is your AB basing that is working to reset the trend up, okay? So that's also a possibility that you're getting here. But you're basically seeing that this is a trend, this is a intrawave correction, this is a counter trend. If you're not, let's say you throw Elliott wave out the window, you're not counting waves, you're just looking at support and resistance, this is a really simple play. This is resistance, you consolidated at resistance, you broke it, you retested as support, and you continue, okay? I think the simplest way to look at it should be the way you depend on the most, because it's typically high probability when it's, clean, clear, concise, obvious. It usually is likely playing out in that way. So that's how I would see Algorand. There's no threat to a breakdown. Like, you know what I mean? There's so many different ways to look at this. I already talked about your momentum indicator on the 4-hourly, on the hourly, and then basic support and resistance. To think this is breaking down, I don't know what tells you that, You can't just, obviously you can always say, well, it can go down. Obviously anything can happen, like the moon can fall out of the sky, but like what is telling you, other than the fact that it's going down on a very small time frame, what's telling you that it's going down, If anything, we've been going up all month. It's, the month's almost over. We've come down a little bit at a support line. That's bad analysis. I guess that's what I would say. It's just bad analysis to think that because you're retesting support, and by virtue of going down, you're retesting support, then you're going down. Here, bonk, on a small time frame, we've been looking at this and waiting in this for quite some time, but this is quintessential AB basing. You go up, you meet wave 4 of the previous trend, you come back down, you're holding a support level, your momentum indicator is showing you the same thing. This is basically collecting, right? Why is this going to pump? Because it does its consolidation, because it goes through accumulation, because it does this AB basing, accumulating buys. I'm not the only one buying this small cap altcoin, right? There's other savvy investors that notice this and are like, ooh, this is accumulation, right? As Wyckoff would say, this is the cause, and this is the effect of such cause. So, I mean, you can see that throughout the market. I'm really excited for this in particular, but, obviously for pretty much everything that we're looking at. All right, let's keep going. Dent. What do we see? Okay, guys, it's 5 ways up, 3 ways down. It really, really helps to be market literate. I don't think it has anything to do with the fact that I do Elliott wave, or, if you do, some other type of analysis. Everybody should be able to look at simple support and resistance, right? And here, the simple read is that you clearly had resistance here. You broke it. You retest it. That's it. Basic support and resistance play. You buy support and you sell resistance, right? like generally speaking, but you wouldn't sell it because if you zoom out, right, you understand that you're at really high time frame support. You're on monthly support, so you'd be kind of silly to sell anything at such a high time frame of support. You just let it ride, right? But you just ride this trend. People don't want to ride the trend because it's too simple. They've been burned, and they're incredulous as to it can't be that easy. No, that's not possible. It can't be that easy, right? There's more coming. Like, some other thing is going to make the price go down to zero, and I don't want to be hurt again, But it's, that's why we learn to read markets, so that you're not making emotional decisions so much as analytical decisions based off of good data, where it's a high probability sort of read on the markets. So if you look at Dodo, you could look at this as a corrective zigzag, and I want to say this is some sort of leading diagonal. Where you put in 5 waves up, you put in 3 waves down, and then right here is a series of AB bases where you're going to continue up and out. Okay, but at the end of the day, let's say, once again, you throw out all your knowledge of Elliott wave theory. You just look at the support and resistance. What do you see? On a high time frame, you formed this inverse head and shoulders. You broke out. So you confirmed the pattern, okay? Remember, these patterns confirm upon breaking out of them. So you broke out of the head and shoulders pattern and you retested it as support. That's how I would read it. Myself, even like loving Elliott wave theory and doing it every day, when I'm putting big money on the line, if it doesn't work out really simply in terms of basic support and resistance, I don't even bother trying to read the Elliott waves. I don't even bother. What's the point? Because if it's accurate, usually it's corroborated by simple support and resistance analysis. And I always say, my mentor would always say, Mark Schwager, he would always say, all of the people I've interviewed for Market Wizards, they all practice different disciplines, all practice different styles of chart analysis. Some don't even do chart analysis. Some just, kind of gamble and do fundamental analysis. They all have these things in common. They're all successful, or else I wouldn't be interviewing them. They have a 10-year track record of success. And it's not just, I said I made money, but they show me data, right? And then the other thing is they all have all the technical traders have a decent understanding of support and resistance. When he said that, I was like, okay, I know what I have to master. Even if, sometimes I may not be comfortable reading waves on a particular asset, I need to have a really good handle of support and resistance. What do you see here? Inverse or a cup and handle, breakout of resistance, retest as support. Okay? And all you see here is actually a continuation of that. If anything, you can say this is leading diagonal, but let's say you don't know any of that. You're fine, given that you've broken resistance and you're consolidating on top of resistance as support. All of this for you, if you don't know anything about Elliott wave theory, you're consolidating on top of resistance as support. You should expect a markup from here, right? Because remember, why do you mark up? You don't just mark up because somebody said something good about your asset in the news. It's because you spend time gathering orders. There's a technical reason why you go up. Okay, on the high time frame, you did this for months, right? That was the bear market accumulation. On a small time frame, you do all of the consolidation to accumulate everybody's orders, and then when there are no more sellers, when there's no more resistance, you fly. That's why I'm saying, don't be surprised if Bitcoin flies up to double in a matter of days or something crazy. I don't know what it's going to do. But all of the conditions have been met for a massive meteoric rise because you did your high time frame consolidation and there's no resistance up here. There's no technical resistance, right? There's a little bit of friction perhaps at that level, but there's no real resistance. So, yeah. That's how I'm looking at it. Let's keep going. This was Dogecoin. Okay, yeah. I didn't even know what we were looking at. Ethereum. All this is a bunch of consolidation on top of a very important level of resistance. Okay? If you know basic support and resistance, technical analysis, nothing should scare you once you're above resistance. The only time you should get nervous is if you're breaking important resistance. Then you're looking for reversals. Okay? But once you've broken important resistance to the upside, you're consolidating on top of this important resistance, you should expect continuation, right? Obviously, we can get into the weeds and say, well, what is going on here? Is this, some sort of WX? I would say this is a W. Sorry. I would say this is X. No, I see. This is a 333, I think. W, X, Y, X, Z. Something like that. It's a consolidation. I think it's a 333. Okay? That makes sense to me. Yeah. They're tricky, right? We call them complex corrections for a reason, but you don't have to get them as they're forming to be successful in your trade. All you have to do is look at simple support and resistance. Just like Jack Schwager said. Litecoin, same thing. I would say this complex correction is something like this. Ooh, that's clear. That's clear. That's a double 3. That's a W. That's your X wave, and that's your Y wave. And this is what we call a running flat correction. So this is a double 3 running flat correction. This is very, very likely the end of that correction. The impulse, because we know the impulse always ends the correction. So that's how I would read it. Again, even if I'm wrong on this, even if you're wrong on this, even if that is, I'm just making things up, at the end of the day, what really matters and where you really want to hang your hat on your analysis, in my estimation, is the fact that you're in an uptrend, you've broken really crucial resistance here. Crucial resistance here. And at both instances, you not just only broke it, but you retested it. You broke it and you retested it, okay? The retest is crucial, important, absolutely vital. Because if you don't retest it, you're bound to come back down. And in doing so, you're likely to continue. You have license to continue with those retests of crucial resistance. So that's what I'm seeing with Litecoin. I am seeing that as a double 3, right? I don't know. That seems to jump out at me. RSR. Okay, so this would be a good example of consolidating at resistance. I talk about this a lot. People talk about rejections and everything's a rejection. Not everything's a rejection. This would be an example of meeting resistance and consolidating at that resistance. So here's a double resistance. It's a very important resistance. Not only is it the midline of this bear market accumulation, but it's also this high time frame, probably 400 to 500 days worth of resistance of the downtrend. Okay, so you're looking at a high time frame downtrend, this solid line that you've been in since the fall of 2021. The price comes up. It obviously meets resistance. It does a flat correction, right? An ABC flat correction. Simple. And that flat correction seems to be complete with this impulse, right? Here. I think you can clearly see 1, 2, 3, 4, 5. 5 waves down, okay? So I do expect a little bit of consolidation on a smaller time frame and then a breakout. Shiba Inu. Same concept as what we just looked at with RSR. You basically just met the 300 day, maybe it's 300 days, something like that. Let's just see. It's a high time frame resistance. This purple box once again is the bear market accumulation from May of 2022, May 12th of 2022 until today. It's 263 days. Okay, so let's go back down the 4-hourly time frame. So 262 days worth of resistance, right? You met it, and you're consolidating at it. It's not a rejection. A rejection would be like this, okay? And you get a rejection when you come into it with a corrective wave, not with an impulsive wave. If you come into it with an impulsive wave, you have an intra-corrective wave, or intra-corrective wave, right? So you're not completely losing trend. And here we maintain the trend. The trend is up, intra-corrective wave, expect to go and continue that with obviously a move up, retest of this important resistance that will finally break to the upside, and then a continuation. So that's what I see with SHIB. But yeah, nothing to really worry about. You've been going sideways for, 10 days? 10, 11 days? More, maybe 12 days. You've been going sideways in an intra-wave correction. And I think it's pretty straightforward to read. At this point, it's a W, probably an X, Y. Maybe a WXY or a WXYXZ, some sort of complex correction, but it's a flat correction, right? At the end of the day. With a high degree of probability, that can be said. Synthetics. Synthetics. Okay, here's what you're doing here in terms of support and resistance. You met this midline, right? The midline, we know if you're below it is resistance. And once again, the purple box on the high time frame is the bear market accumulation. You met the midline, and that was resistance. You're consolidating at resistance, not bearish. Not only are you consolidating at resistance, but you're flipping because you broke in reaching that midline. You broke that high time frame downtrend of like 400 plus days in synthetics. So you broke that. You retested that, and you kind of consolidated at that midline. And here what you're doing is you broke the midline finally, and then you put in this flat correction, right? Retesting the midline as support. And you should continue up from here. This is also what your momentum indicator is saying. Would not freak out. If you're freaking out, zoom out. Use basic support and resistance. Read the markets as best as you can. You should be able to see crucial resistances flipped into support. And that gives you confidence to trade. But again, you're never going to trade these things. And I'm not talking only about... I know people buying on spot that are afraid to press the button or to pull the trigger, rather. It doesn't matter. You know, the mindset is the mindset. If you're fearful, you're not even going to buy spot. And from, talking to, people who use leverage, high leverage, that kind of seems weird, but it shouldn't, because, the mindset, if it's fearful, it's fearful. If it's greedy, it's greedy. Even though the risk is minimized on spot, people still feel, I don't want to buy and have a drawdown. It's just, it's deflating, So the only way you can get around that, not listening to what anybody says, is building these skills reading the markets, seeing it play out enough times where you don't just have an opinion or believe it, you know it. And so you come from a place of knowing, okay, when this happens, that happens with a really high degree of probability. I already showed Tron. This is this triangle, high time frame. It's like 500 days, almost 600 days worth. Okay, and you broke that to the upside, and you retested that as support. And this is just, you're headed up. Okay, so if you jump down on a smaller time frame, you can see that quite clearly. Looks like a 1, 2, 3, 4, 5, 1, 2, 3. Okay, so that's just a wave 1, wave 2 situation. That's really straightforward. Nothing to write home about. It's very clearly impulsive to the upside. Very favorable for continuation to the upside. Okay, XRP. Okay, all these assets, you can see the clear uptrend. See the clear uptrend. 1 second, let me just double check something. Okay. All these assets, you can see the clear uptrend. Okay. Here's the clear uptrend, and I think what you're getting in XRP is this right here. That looks to me like a running flat correction. Okay, where you get 1, 2, 3 waves up, 1, 2, 3 waves up, and then a pivot, and then a 5-wave move down. Okay, so that's really, really bullish, running flat correction. The first leg of your running flat correction, the A wave, served as a retest of that really high time frame downtrend. Okay, lasted about 400 to 500 days, right? The second leg, or the B wave of your flat correction, served to break that midline, which we know is resistance. Okay? Resistance if you're below it, support if you're above it. And the pivot and the impulse served to retest that midline from resistance into support. So flipping, RS flipping that midline. All of these things, that the assets are telling you, I'm bullish. I'm just doing what I need to do in order to matriculate to the upside. I'm playing these levels as price just plays the levels. If you know how to read these things, there's no alarm. Again, you get concerned when you're breaking market structure, and more specifically, when instead of flipping previous resistances to new support, you're breaking support. Then you're like, more of the same kind of, corrective stuff. But when you're in impulse, now we switched, we went into Zilliqa. We're no longer looking at that previous asset. But when you're in impulse, you're not putting in a bunch of overlapping corrections, right, in the aggregate on the high time frame. You're putting in clear trends. And the clear trend here, impulse. And then here, I think, is a 333. WXYXZ. It's a flat correction. Okay. A lot of people who do Elliott waves don't like reading corrective price action. And complex waves is not the first thing you learn. First thing you learn when you're reading corrective waves is probably your ABC flat correction. I think not that many people get into, or they reach the point in their study of Elliott wave theory, because a lot of people don't really take it seriously, where they get into reading complex corrections, WXYs and WXYXCs and all that stuff. But essentially all it is it's much like your ABC correction, except a little more involved. It's a little more intricate, a little more complex, but all the same, it's still an intra-wave correction. You have your trend, you have your correction. Your trend should continue once your correction is finished. How do you know your correction is finished? Intra-wave corrections always end in impulse. So that's it. Keep it simple. If it's overly complex or you can't explain it, you probably really don't have a grasp on it. But at the end of the day, it's not simple or easy. It can be simple. It's not always simple, but on a high time frame, if you distill the concepts, yes, they are simple. They are simple. Okay, V-Chain, really high time frame, really strong uptrend. Here again is the midline of this bear market accumulation. You retested that, you broke it as resistance, retested it as support, you continue. 5 waves up, 3 waves down. 5 waves up, 3 waves down. You're just, rinse and repeat. It's all downhill from here, my friends. Most of these assets, personally, if you've been reading this market, you probably got in down here. You're just riding it up. You're riding it up. People think that markets go like this. They don't. They don't. Maybe on a really high time frame, they look like straight lines. They don't go like that, though, on a smaller time frame. On a smaller time frame, they do stuff like this, right? They do intra-wave consolidations. Because, remember, the cause for the uptrend is the base of the trend, right? Where you did like months and months and months of consolidation to go up. In order to go up for 2 months at a time, we probably did a consolidation, accumulation of orders for years. And that was exactly what happened, right? And when we're going to go up, some people are going to think we're going down. And also, that's just how people are. Not everybody can read or understands where we're going. So some people are going to think otherwise. Some people are going to want to take profits. There's always going to be a reason people are thinking against the trend. But that doesn't break the trend. Amazing videos of the world says, waiting for the dollar to crash, need DXY analysis. I did do the DXY analysis. Just rewind a little bit. I did it before. Yeah. And yeah, we can wait for the dollar to crash, but at this point, personally, I'm not as dialed in, or I'm not as focused on the dollar as I was before the trend happened. Once we started establishing this uptrend, I'm like, whatever. You know what I mean? Like, the dollar's going to do what I think it's going to do. I'm more interested in analyzing this uptrend, because the uptrend has been established, I think, quite well. This is now a month straight of upside, right? From the 1st of January 2023, you've just been going up. Now we're looking at theta. Uptrend established. Okay, here, most recently, you can see here 5 waves up, 3 waves down, 5 waves up, 3 waves down. And prove it to yourselves. Try and look at how long it took for these 5 waves, how long it took for these 3 waves, how long it took for these 5 waves, how long it took for these 3 waves. You should have the time be comparable. And that tells you, okay, these are wave 1, wave 2, wave 1, wave 2 of varying degrees, but they're wave 1, wave 2 constructions of this uptrend, of this larger uptrend. But again, if you guys have been, like, watching this, or you're trading this, you just wait a little bit and you're in profit, and you don't have to worry about getting stopped out or, being in the negative. Again, let's say you know nothing about Elliott wave theory, but you recognize patterns, a lot of beginner traders do. You broke out, you retested. That's it. Prove it to yourselves. Don't buy my word, don't take my word for granted, or whatever I say as correct. Just do it yourselves. Use basic principles, simple concepts of technical analysis. Look at the asset on a high time frame. Look at it on a small time frame. Prove it to yourselves. What's it doing? Where's it going? How's it getting there? You should be able to answer those questions. right? 5 waves up, 3 waves down. Okay, this is Telcoin. You're meeting important resistance, right? The resistance of this high time frame bear market accumulation channel, right? You meet it, what's going to happen? It's not that you reject from it, but you consolidate at resistance. So in this case, this highly volatile asset goes up for 5 waves and then does a 3-wave correction that looks like this. And this kind of move off of the resistance takes the form of this impulse, this C-wave impulse of this ABC flat correction. Do you see that right here? Boom, boom, boom. So do expect some consolidation at this point and continuation. Another way to read this would be to read this as your inverse head and shoulders, breakout and retest, something like that. Matic. Okay, so the story here is much like what we've been seeing. You come up all the way to your bear market accumulation channel, which is resistance. You consolidate at resistance with a 3-wave move, which is likely a flat correction, ABC flat correction. Okay, you break it. What do you do after you break high time frame resistance? You retest it as support. There's nothing more to be said, right? That needs to be said. Obviously, you can analyze it further. You can go into how this is a wave 1, wave 2 situation, and you can look at the time it took for these 5 waves to print and these 3 waves to print, but you don't really need that. It's just basic support and resistance. Basic support and resistance. It looks good for continuation to the upside. And actually, Matic is one of those. If you go on a really high time frame, so we're on the monthly time frame now, and you turn on your EMAs. So I'm going to turn on all my EMAs, exponential moving averages. Okay, my 21, my 55, my 89, and 144. And you can see that there's basically nothing stopping it. So some people may be wondering, well, you said you turned on 4 EMAs. I only see 1. There's a yellow line. The reason there's only 1 EMA is because there's not enough price data for there to be a 55 period exponential moving average, right? Because there's not enough trading days on this chart with this asset to have a 55 exponential moving average, to have an 89, 144, so on and so forth. Hope that makes sense. So this is why the 21 exponential moving average is the only one showing up. Now, you broke the 21 exponential moving average to the top. You broke it, and it wasn't like, oh my god, big deal. It's just you went through it. And remember, what does this mean? Remember what your indicators mean. So you're not a slave to your indicators. They're not using you and you're using them. Your indicators are essentially telling you your average price every 21 days. If you measured every 21 days using this mathematical formula, your average price for the asset should be here, should be here, should be here, should be here. That's all it's telling you, okay? So basically, in bear markets, you're typically below average, below average, below average, okay? And then when you're consolidating, you're pretty much average, average, average. And when you're going bull markets, you're above average, okay? So Matic has already broken the 21 exponential moving average, which basically says it is above the average price it should be based off of mathematical calculation of its 21 exponential moving average, okay? That means it's very likely, given that, there's a desert of trading over here, price action. If you don't believe it, turn on your VRVP indicator, and you'll see that once, where we're at right now, there's nothing stopping us from not only making an all-time high, but going into price discovery. So this is, I mean, look, when it happens, it's going to happen fast. People that are not involved are going to have a tough time getting involved. And people don't really remember this, or maybe they've never had the experience. But when the bull market really gets going, it's hard to put in an order. The price goes so fast and it's so volatile, it's hard to even buy or sell. A lot of times, exchanges go down, so you can't trade, period. So I just, not to say that the whole entire bull market is going to be like that. There's always going to be some consolidation, but, getting in a good order, getting in good buys, you do that during bear market accumulation. You do that during accumulation phases or in the beginning of the trend establishing itself. So, yeah. All right, let's go back to our smaller time frames, turn off our EMAs. Guys, don't forget to like, share, and subscribe if you're getting value. Okay. So DYDX. Let's turn off the VRVP. Okay, cool. DYDX, again, just there's a story. All you have to do is be able to read it. You met significant resistance, the midpoint, or what some people call the heart line of this bear market accumulation channel. You did an ABC flat correction, right? You basically consolidated at resistance. You broke it. You retested it down here as support. And now you're at another important resistance where you're also putting in what seems to be a flat correction, which you will then proceed to break in like manner. Okay, so that's the story being told with this asset DXDY. It's in an uptrend. That's the definition of an uptrend. I always say this. Definition of an uptrend, you're breaking resistance, retesting it as support. Breaking resistance, retesting it as support. And so on and so forth. Just because you do retests as support doesn't mean you're bearish. That's just a counter trend. That's to be expected, right? The only time you don't have to retest anything as support is when you're in price discovery. And at that point in time, you're just, you're breaking resistances that you freshly made. But they're not long-standing resistances. That's why a bull market's a bull market and can go up parabolically, because there's just there's so little resistance and friction to the price moving in that direction. So that's DYDX. It's in an uptrend. And you recognize, the sooner you recognize the uptrend, actually the less risk you take. The longer you wait for the uptrend to get more and more established, the more risk you take, because at a certain time, at a given time, what's going to happen is you're going to put in a full 5 waves up, and then you're going to have to put in a full 3 waves down of that larger degree. And then you're going to continue. And you're just going to keep going until the larger 5-wave structure of the largest degree that you're trading is met. I hope that makes sense. If it doesn't, I don't know how I can explain it any more succinctly. It would just take too long. But in any case, yeah, you want to recognize these things earlier, because it presents less risk. Okay, Harmony 1, you retest important resistance as support, right? This high time frame 400 to 500 day resistance broken and retested as support. Ever since, you're in this uptrend. I mean, what's more clear than that uptrend? Okay, I don't know. Here you can see some sort of inverse head and shoulders. Maybe an inverse head and shoulders here, a breakout, a retest, and a breakout. And all you're getting here is just a series of higher highs and higher lows. Higher high, higher low, higher high, higher low, higher high, higher low, right? what do you expect is going to happen? As you're going up, your momentum indicator on the 4-hourly time frame, probably the hourly time frame, is resetting back to oversold territory. It's simple. It's all downhill from here. All you got to do is get involved and then go away, right? You don't have to be 200 IQ to make money in a bull market. I guarantee you, lots of people who are not really market savvy or savvy in technical analysis are making money in a bull market, right? Or have made money in crypto bull markets. It doesn't take a genius. MOVR, same thing. Here you're actually just now breaking. You just now broke this high time frame resistance, right? This bear market accumulation. You can see it. I put it on all the charts. You matriculated up. You took January to go all the way up. Break this resistance, retest it as support. Expect to continue. There's nothing scary about any type of retracement in a trending market. Because, I'll say this. Also, yeah, I'll just point out the fact that you can also read this as, some sort of inverse head and shoulders. You break resistance, retest it as support, right? You can always do that. So many ways to read these trends. But I'll also say that when you do get your big retracement, right, after your impulse, you're going to spend time in distribution. Just like on a high time frame, we spent 230 some odd days, sometimes 270 days going sideways, accumulating in the bear market before we marked up. You're going to do exactly the same thing, not exactly 270 days, but you're going to spend some time in distribution going sideways, doing 2 degrees of AB basing and a pivot before going into the bear market. So you don't have to be so concerned and scared that it's going to happen all of a sudden, especially not on a high time frame at the beginning of the bull market. Here's self key. This is, just so clear. Just zoom out. Zoom out. Especially with really volatile assets like this, just zoom out. You broke, you retested. That's it. And that's it. People are going to be scared out of this, but, I guess not everybody's meant to win. Not everybody's meant to, be able to trade these things. Little red candles are going to scare people in a bull market, and that's fine. But don't let it be you. Not because I said so, but because you've put in a little time during the bear market to build your skills in reading markets, and you understand basic support and resistance. You don't have to understand what a 333 is, a WXYXZ, or whatever the fuck. You just have to understand simple support and resistance, breaking resistance and retesting it as support. And as long as that continues to be done, you perceive the trend to still be alive and well. That's essentially it. Like we said, the DXY is going to correct when it corrects. But it's going to be stuck in this channel as it's been stuck in this channel pretty much all month. And I do believe that this is one of the final moves, just judging by our momentum indicators here on the hourly, on the 4-hourly. You're going to break down from this level, right? Let's go back on the 4-hourly. This channel is not going to last forever. Eventually, you're going to break down from this channel. And yeah, it will coincide with a big move in Bitcoin and stocks. But, all you got to do is just set yourself up, get in your positions, and wait. There's not long for that move. So that's pretty much my analysis. Let's have a quick look at total cryptocurrency market cap. I would change my read here. Okay. I would say this is not a valid inverse head and shoulders because the retest has broken the neckline quite significantly, right? Breakout, retest has significantly dipped below the neckline. So I would change this to say this is more likely than not a running flat like this. Whoops. A running flat like this. That's what I would say. So I think you can see it better on a higher time frame. On the 4 hourly time frame, I think you can see 3 waves here. 1, 2, 3. 1, 2, 3. 1, 2, 3, 4, 5. You get some consolidation here, and you continue. This is what your momentum indicator is saying as well. So I'll put that in just for the sake of documenting my analyses. And that is that. My double 3 right here. So we'll see how that plays out, but it's a running flat, which is bullish. And at the end of the day, you are at a resistance level, right? This dotted line represents a high time frame resistance that you've put in. And here are the data points, the previous data points, right? So you met that previous resistance. And now what you're doing is you're consolidating at resistance. You haven't broken the resistance yet. I thought this was the break of resistance, but you haven't broken it and retested it. You need to break it and retest it. This is consolidating right below resistance, which is not bearish. It's fine. It's just what price does. It's going to break it, retest, and then go. Okay. So yeah, that's it for me, guys. Hope that was helpful. Hope that was useful. Like, share, and subscribe if you haven't. And I will see you tomorrow.